Hi guys, and in today's video, we're talking about investing in the banks. And there's a couple of things we're going to cover. Why do I think they're going to do well? What's in the short term? And what's in the long term? And are there any risks and things like that? So let's get stuck into it. Why do I think banks are going to do well? Well, there's different things. Number one, in the UK and in the US and around the world, banks have de-risked their businesses since 2008. They've gotten out of investment banking. They're doing less, subprime and less risky loans and things like that. And a lot of them have, moved away from those things, especially in the UK with the retail banks. I think there's a lot less of that. And why do I think they're going to do well? Well, they've de-risked. That's number one. Number two, interest rates have gone up. So something in the banking industry in the UK, they call it the net interest margin, the NIM. This is what a lot of the banks look at, and that is the net interest margin between how much they're lending out and how much they're getting in. And that's going to remain probably quite high for some time, because on the standard variable rates and on the rates that they lend out, there's quite a big spread. And the other thing, number three, is when you compare the debt amounts to what they're giving out now compared to 10 years ago, 20 years ago, mortgages, certainly in the UK and in lots of places around the world, people are borrowing more debt, even me, everybody now, when you're buying property, you're getting out more debt. And who's that good for? That's good for the banks, if they're lending out, like, luckily I fixed my mortgages and I told everyone to fix their mortgages in 2020, Q4 2021. If you didn't do that, a lot of people are sitting on very, very high mortgage costs, 5, 6, 7, 8, 9%. And it's even worse for buy-to-let landlords, which I kind of did forewarn people that might be the case. Nevertheless, who's that going to benefit? It's going to benefit the banks. In the short term, this week's a big week. I'm recording this on Sunday, the 23rd of July, and there's 3 banks, I believe, that report in the UK this week: Lloyds, Barclays, and NatWest. NatWest are in this kind of a bit of a hubaloo with Nigel Farage, which I made a video about. I don't think that's going to impact their shares too much, although they did go down a little bit. I was trading NatWest last week, got in at about 245 and exited at 260. I think on Friday they went down, or last week they went down to 255. But overall, I think in the short term, banks are going to do very, very well. I think the results are going to be just enormous this week. I'm really excited to see what they do. So I'm trading the results. That's what I'm doing. I'm trading the results. I think they're going to do well this week. I think the bank shares are going to go up because, they're going to make billions. They're not going to make 2 billion, 3 billion. It could be 4, 5, 6, 7, 8, 9. It could be very, very good for a lot of these banks. And a lot of the banks are only valued at like 25, 30 billion. It's just mad, really, how low they're valued. The PEs are like really, really small, the PE ratio. The videos about working out the PE ratio and whatnot. So I think that's interesting in the short term. The dividend's very good as well. Anyone that's interested in dividend investing, like, banks are going to make a lot of money in the next year or two. So I think that dividend is probably safe for at least 2 or 3 years, is my opinion, using financial logic. I think that's safe. The long term is a little bit less known. I personally believe interest rates are likely to stay above 4% for some time, which is going to probably increase profits quite a lot. Also, some people might say that, oh, well, if the interest rate on the loans goes to 4 or 5%, but then they give out 4 or 5% in savings, then they're not going to make any money. That's completely incorrect, because most people in their 20s, 30s, 40s, and 50s, certainly 20s, 30s, and 40s, have a lot more debt than they have savings. They're not going to have 500 grand in the bank in savings, most people, right? But they are going to have 500,000, or there will be a lot of people that have 3, 4, 500,000 in debt to the banks. Therefore, the banks are going to do very, very well in an environment where interest rates are kind of 3, 4, 5, 6, 7%. They're going to keep doing well for a number of years. There are some risks to loan losses in the long term, with percentage of people defaulting. In the UK, I don't think that's going to happen. It will happen, but I don't think a vast majority of it is going to happen to a lot of people, and I'll tell you why. A lot of the banks are increasing their loan losses, their accounts and their kind of their capital that they're allocating to loan losses. So some are preparing for that. I think Lloyds are doing a particularly good job. I think it was Lloyds. They have over 4 billion stacked away. NatWest, I think, have 1 billion. So over time, I'm hoping they're gonna put more aside for loan losses. But I don't see that many people defaulting in the short term. And I'll tell you why. The government has put through a whole raft of protections over the next 12 months. So that's going up to about June 2024. After that, we'll see what happens, because the banks can't keep on kicking the can down the road with people that can't afford mortgages. So I do think we could see defaults. I don't think after 2024, we'll see how much it is. And this year, I don't think there's going to be more than 1% defaults in the next year. You know, I can be wrong. Of course, I can be wrong, but I don't see it being because of what the government are doing and the banks are doing. They're allowing people to have interest-only mortgages, to have mortgage interest holidays, blah, 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 extending terms. They're being flexible over the next year. We'll see what happens in 2024, but I don't think it's going to be very, very long. So I think the longer term for banks, you know, for the next, you know, 2-3 years, I think it's probably going to be okay. I'm particularly favorable on the next few, like 2 weeks. I think it's particularly good in the short term. And there are risks to bank shares. If you look at them, they are very volatile. You know, people, I think quite a lot of big companies and big traders do trade the results. So a lot of the time they do go up after results, you know, which happens in every, you know, in lots of shares, people trade on results and then trade in and out. But I think particularly with banks, they do look like, if you look at the charts, and I'm not massively into charts, I'm a long-term investor in most cases. But I think there's an opportunity here. And when I think there's an opportunity, I do get involved in trading. And yeah, this is something I'm doing this week. The results are out for Lloyds, Barclays, and NatWest. It's also quite a big week for me because my wife is due with our first child on Wednesday of this week. So it could be quite a big week in lots of ways. I've also got a job interview for an agency where I could be potentially managing 40 to 50 people. So that's tomorrow. So I've got to do some preparation for that. But anyway, I thought I'd make this video because I think, you know, I really think this could be interesting what happens with the banks this week. I don't think Nigel Farage is going to, you know, he's going to affect the banks that much. But anyway, hope you like this video. Let me know, what are you doing? Are you investor? You're a long-term investor in banks. Are you interested in trading? Have you done any trading before? Is trading something you would do? Or do you think, no, it's too risky, I'm going to go away from that? If you think there's risks, how do you manage those risks? I'd love to hear what you guys do. And remember that knowledge is power, especially the right kind of knowledge, and progress is everything. There'll be some other videos that you might like around here. If you haven't already, like and subscribe. You know, guys, about 50% of the people that watch this channel don't subscribe. So I'd love to get over that 1,000 subscriber mark. It's something I've wanted to do for some time now. And if you can help me by subscribing and sending it to family and friends that could be interested in learning more about managing their own funds, about using financial logic, and just about exploring the different worlds of investing, trading, property, startups, etc., and improving themselves, because of course progress is everything, that would be awesome. Right, guys, I'll see you in the next video. Take care.